The Reserve Bank has raised its economic forecast for inflation this year and signalled that interest rates will need to remain higher for longer. Joining me now is our business reporter, Edward Boyd. Ed, the RBA is concerned with petrol prices, higher prices charged by the services sector as well.
Yeah, the services sector, service price inflation has been still going up. So that's things like insurance, education, rents, holiday travel. All of these things are still going up incrementally in price, and it's contributing to inflation staying around a lot longer than anyone would like. Let me put up a chart. This is the most critical thing I think we saw yesterday from the RBA in its Statement of Monetary Policy, its quarterly economic forecast. You can see back in February, they expected inflation to finish this year at 3.2%. And then yesterday, they've now upgraded that to 3.8% for inflation by the end of this year. You can also see they think wages are going to increase very slightly compared to their previous forecast. But the inflation one is significant because that 3.8% is higher than where inflation is currently sitting in the March quarter, which is 3.6%. So this is a big upgrade here from the Reserve Bank, and it means that interest rates are going to need to stay higher in Australia for longer. This is Governor Michelle Bullock yesterday not ruling anything in or out, which she has said, Laura, mind you, the past two press conferences in a row.
We think policy is restrictive. We don't think we necessarily have to tighten again, but we can't rule it out. If we have to, we will. If we really think that inflation is going to be persistent and significantly above our forecast, we will tighten again. But the board made the judgment at the meeting that the right stance at the moment is to stay where we are, continue to observe what's going on in the economy.
She's a great communicator and is very clear when she speaks, Ed. The good news is, separately, good that she's a good communicator, but good that a majority of the big four bank economists are still expecting rates to be cut in November.
They sure are, and these research notes came out about an hour to 2 hours after the 2:30 decision yesterday afternoon. So you've got the likes of ANZ, National Australia Bank and Commonwealth Bank's economists all still expecting rates to be going down in November. The only bank that's the outlier is Westpac, and they're expecting rates to be cut in the first 3 months of next year. So that would probably mean the February or March board meeting. But I think we're seeing some pretty big headlines in the newspapers today trying to build up the talk of another rate rise in Australia. I think that might be a little bit overblown. Listening to Michelle Bullock's commentary yesterday, it was pretty similar to what she said 6 weeks ago and pretty similar again to what she said 6 weeks before that. But the critical thing yesterday was upgrading that inflation forecast. That was the key message, which does mean rates will need to stay higher for longer. But I think some of the headlines we've seen today, real concerns about rate rises, might be a little bit overblown this morning.
Okay, thanks, Ed. Appreciate it.